Buffett's first rule is simple: invest in yourself. He's known for saying, the best investment you can make is in yourself. Think of it this way: education, skills, and knowledge, they all compound over time, just like money. The more you learn, the more you earn. It's as simple as that. Investing in yourself doesn't have to mean dropping thousands on a fancy degree. It can be as simple as reading a book a month, taking a free online course, or shadowing someone you admire. The key is to never stop learning, to always be curious, and to constantly strive to improve yourself. Buffett himself is a voracious reader. He spends hours every day poring over books, reports, and newspapers. Start investing in yourself today. You won't regret it. All right, on to rule number 2, and this one is crucial. Never lose money. Buffett lives by this. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1. Now, he's not saying you should be too scared to invest or take any risks. What he means is that you need to be smart about it. Don't just throw your money at the latest meme stock or crypto craze because everyone else is doing it. That's not investing, that's gambling. Instead, invest with a margin of safety. That means looking for undervalued assets, companies that are trading for less than they're actually worth. It's like buying $1 for 50 cents, except in this case, you're buying a piece of a company that has the potential to grow significantly over time. This requires research, patience, and a long-term mindset. Protect your capital and let compounding work its magic. That's how you build real wealth, the Warren Buffett way. Patience. It's the key to success in pretty much every aspect of life, but especially when it comes to investing. Most people want to get rich quick. They want to see those gains overnight. But Buffett, he's playing a different game. He knows that real wealth, the kind that lasts, is built over time through slow, steady growth. He once said, "The stock market is a device for transferring money from the impatient to the patient." The impatient investors, the ones who are constantly chasing the next hot stock, they're the ones who end up losing money in the long run. The patient investors, the ones who are willing to hold on to their investments for years, even decades, they're the ones who come out ahead. Why? Because they understand the power of compounding. Compounding is like magic. It's the ability of your money to make more money, and then for that money to make even more money. So be patient, my friends. Don't get discouraged if you don't see results overnight. Slow and steady wins the race. All right, let's talk about something Buffett is really good at, picking winners. But here's the thing, he doesn't pick winners by following the crowd or chasing the latest trends. He sticks to what he knows. He invests in businesses that he understands, companies like Coca-Cola, American Express, and Geico, businesses that have been around for decades and have a proven track record of success. He famously said, "I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over." What he means by that is, he's not trying to be a genius or predict the future. He's just trying to find good businesses at a fair price and then hold on to them for the long term. So what's the lesson here? Simple. Don't try to be an expert in everything. Focus on what you know, what you're passionate about, and what you understand. Stick to your circle of competence, and you'll be well on your way to building a successful investment portfolio. Okay, let's talk about something nobody likes: debt. Because here's the thing, debt can absolutely crush your financial future. It's like a weight around your neck, dragging you down and preventing you from achieving your goals. And nobody knows this better than Warren Buffett. He's famously debt-averse, and for good reason. He once said, "I've never borrowed a significant amount of money in my life." And that's not because he couldn't afford to, it's because he understands the true cost of debt. See, when you're in debt, you're not just paying back the principal, you're also paying interest. And that interest can really add up over time, eating away at your hard-earned money. So, what's the solution? Simple. Avoid debt like the plague. Start by creating a budget and sticking to it. Then, make a plan to pay off any high-interest debt you have, like credit cards. And whatever you do, avoid taking on any new debt, especially for things you don't need. Remember, the less debt you have, the more financial freedom you'll have. All right, let's talk about the long game, something Warren Buffett is a master of. Most people, they're thinking short-term, they're worried about what the market is going to do tomorrow or next week or next month. But Buffett, he's thinking decades ahead. He's not interested in making a quick buck. He's interested in building something that will last, something that will continue to generate wealth for generations to come. He famously said, "Our favorite holding period is forever." That's the kind of long-term mindset that separates the good investors from the great ones. Stop thinking about investing as a way to get rich quick, and start thinking about it as a way to build wealth over time. Focus on finding businesses that are built to last, companies with strong fundamentals, a competitive moat, and a history of innovation. If you can invest in them early and hold on for the long haul, you'll be well on your way to building a legacy of wealth for yourself and your family. You ever notice how successful people tend to hang out with other successful people? It's not a coincidence. Success is contagious. When you surround yourself with driven, ambitious, and positive people, it rubs off on you. And nobody understands this better than Warren Buffett. He's famously said, "You want to associate with people who are the kind of person you want to be." He attributes much of his success to his longtime business partner, Charlie Munger, whom he often refers to as his sounding board. Munger, with his own unique insights and experiences, has played a crucial role in shaping Buffett's investment philosophy and decision-making. So, what's the lesson here? Take a good hard look at the people you spend the most time with. Are they lifting you up or dragging you down? If it's the latter, it might be time to make some changes. Remember, you are the average of the 5 people you spend the most time with. The Millionaire Next Door: How Frugality Fuels Wealth, the Warren Buffett Way. Warren Buffett, one of the richest men in the world, is also one of the most frugal. This billionaire still lives in the same house he bought in 1958 for $31,500, drives a modest car, and doesn't spend his money on lavish parties or expensive jewelry. Why? Because he understands that frugality is not about deprivation, it's about freedom. It's about having the financial security to live life on your own terms, without being beholden to anyone or anything. Being mindful of your spending habits and making conscious choices about where your money goes can make a huge difference in your financial future. Look for ways to cut back on unnecessary expenses, negotiate better deals, and live below your means. Remember, it's not about how much money you make, it's about how much money you keep. Calculated risks. How to win big without losing it all, according to Warren Buffett. Every investment carries some level of risk, but that doesn't mean you should be reckless with your money. Buffett understands that risk is an inherent part of investing, but he doesn't shy away from it. Instead, he embraces it, but in a calculated and strategic manner. He carefully evaluates potential investments, assessing the potential downside before making a move. He famously said, "Risk comes from not knowing what you're doing. The more you understand your investments, the less risky they become." Don't be afraid to take risks, but don't be stupid about it either. Do your research, understand the potential downsides, and only invest what you can afford to lose. The true meaning of success. Warren Buffett's secret to happiness. Money is important. It gives you options and security, but it's not everything. True success, the kind that really matters, comes from making a difference in the world. And Warren Buffett, despite his immense wealth, understands this. He's pledged to give away 99% of his fortune to philanthropic causes, saying, "If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. Finding ways to give back, to make a positive impact on the world, can bring a level of fulfillment that money simply can't buy. Find a cause you're passionate about, volunteer your time, donate to a charity, or use your skills to help others. Success is not measured by the size of your bank account, but by the impact you have on the world around you. 𝒊𝒏, your financial future starts now. So there you have it. Warren Buffett's 10 rules for success. These aren't just for billionaires, they're for everyone. No matter where you're starting from, these principles can help you take control of your finances, invest smarter, and build a more secure future. Warren Buffett started with just a few $100s, and look what he achieved. He didn't have any special advantages, he just had the discipline, the patience, and the long-term vision to follow these rules. Now, what will you do with it?